Hi everyone, this is Ashish with Investor Friendly CPA, and today we are covering why S corporation might not be the ideal entity for your real estate investment. This is a very popular question again amongst business owner and investors, and I've seen many clients face negative tax implications because they or their professional do not know about this, or they don't talk about this. So before jumping into why real estate is not good in S corporation, let's talk about when is running real estate in the S corporation good. Okay, you can do so many things with real estate. So if you are a developer or flipper, then S corporation can provide you huge tax savings. However, if you are involved in the rental real estate, then S corporation is not good. And the rental real estate involves investment in multifamily, apartments, warehouses, office spaces, and those kind of residential and non-residential rentals. You want to avoid S corporation for those. So this is going to be a two-part video because this is complicated, and I just want to cover a few points on each part. I'm going to cover 2 points in the first video. So the first reason S corp is bad for your real estate rental investment is this: you are converting your non-self-employment income to payroll income that is subject to self-employment income or FICA tax. Okay, so think about this: your rental income are not subject to self-employment tax. That's 15.3% right now. But when you run your real estate through S corporation and then pay yourself a salary, you are subjecting your rental income to a self-employment or FICA tax. So that's not good, because the income was never subject to self-employment, and just because you're running it through S corporation, you are subjecting this to FICA tax. So you might be asking, why do I need to pay myself a salary? That's a good question. The answer is you have to. In S corporation, you have to pay yourself a reasonable salary if you run your business to S corporation. So that's the first point. The second one, and I think this is the biggest reason you should not have your real estate in S corporation: you don't get basis for the debt on your property in S corporation. So this is complicated, so let me see if I can break this down. Okay, in taxes you can only lose money that you personally put in, your investment basically, right? You have a basis in the property. That's what we call it, basis. You can only lose what you put it in the property. But in real estate, the debt used to acquire the property gives you basis, even if it's not your own money. So for example, you buy a property for $200,000 and you put $50,000 as down payment, and you take out a loan for $150,000, right? If your property gives you a loss of $100,000 the first year because of, let's say, bonus depreciation, your losses will not be limited just up to your $50,000 initial investment. You can take the entire $100,000 loss if there are no other limitations. Okay? I'm talking about basis limitation. So if you think about it, in any other businesses, you have to invest some kind of money in the business to lose that money. In real estate, you put 50K, get a loan, and you can lose more than your actual investment. Now in S corporation, you don't get that basis. You get that basis in partnership, but in S corporation, you lose that basis that you get from the debt. So in our example, if you run your real estate through S corporation and let's say you get 100K of bonus depreciation through cost segregation, your losses will be limited to 50K. And people invest in real estate to offset their capital gain, W2 income, and business income through this kind of losses. And I've seen clients get shocked when they figure out, okay, I cannot use this loss because I chose the wrong entity. So that's the second reason. Okay, and on this topic, I also want to mention this: normally when you form a partnership and you have a real estate you already own and you contribute that property in the partnership assumes the debt and there is no tax implications. However, in S corporation, whenever you contribute property to your corporation and you don't have enough basis, the assumption of the liabilities by the corporation is going to create some kind of taxable event. So again, this is complicated, and I want you guys to talk to your tax advisor regarding this. But these are first 2 points where you should not have real estate in S corporation, rental real estate. Okay, and in the next video we'll talk about other regions. If you found this video helpful, or if you have any questions, please leave a comment below and we'll get back to you. All the links to get connected with us is listed below. Follow us there. You'll see a lot of good contents going forward, and I'll see you in the next video. Thank you.